Hello and welcome to BQ Prime. A very good morning to all the viewers. Clearly, the markets are seeing some bit of positive momentum in today's session. A lot of cues coming in from the global markets as well, with China going ahead and cutting rates, and that's something which is helping us as well. FMCG pack is also in focus in today's session. In fact, a few of the top gainers on Nifty 50 are coming in from there. We briefly hit the 18,700 mark, but have gone below that, so that's going to be a clear resistance level that we should be watching out for in today's session. In fact, Bank Nifty as well is trading above those 44,100 levels in trade. So an interesting day. A lot of stock specific and sector specific action is what we're witnessing in trade. And the Sensex as well has managed to grow above the 63,000 levels. Joining us on the show is Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services. Siddhartha, good morning and welcome to the show.
Yeah, good morning, Hiral. Thank you. Thank you for having me on the show.
Always a pleasure. So that one milestone stock that we want to talk about today and the sector is MRF. The stock has hit a 1 lakh mark in today's session, and this is the first Indian company to do that as well. Overall, what's your view on the sector and how do you see it moving? Because I think from here on, everyone would be watching out for the next levels.
Yeah, I think it's a historic moment for the Indian markets, having one share which is trading above 1 lakh rupees. So that is definitely a landmark moment for Indian equity markets. But I think more than the price, people should definitely look at what is happening in the entire sector as well as the overall market cap of the company. This has been purely the case because MRF has not given any stock splits or bonuses, and that has led to this huge stock price per se. But if you look at compared to valuations, I think there are tire companies which are doing well on back of the sharp improvement or growth in the auto sector. The OEMs have started reporting very strong growth, recovery in the business, be it two-wheelers, be it passenger vehicles, be it the CV cycle. So that is helping improve the sentiments for the tire stocks also. What is another factor that is helping the tire companies is the fall in crude oil prices and rubber prices, which are the key raw materials, helping them improve margins on a sequential basis. So I think overall view on tire sector remains positive. We have coverage on some of the other tire names, for example, C8, Balkrishna, wherein I think these stocks should continue to do well.
Right, so the tire companies will be in focus. There could be an up move that could continue with tire names as Siddharth is mentioning. Moving on, Siddharth, another sector that we've been looking at pretty closely is the real estate space. If you see from March lows, the Nifty Real Estate Index has gained almost around 36%. And in comparison, if you see a global gauge of the real estate stocks, that's up around 3.6% in the same period. And now with the pause coming in by the MPC as well. The next available thought that everyone has is that probably this would be a start with with regards to the reduction cycle, which would then augur well for real estate players. What's your view on the sector, and what would your top bets be?
Yeah, Hiral, if you look at the real estate space, I think they started doing well post-pandemic, where the pent-up demand kind of led to a sharp change or improvement in the overall industry dynamic. So after almost 10 years of consolidation, the sector is now witnessing a sharp uptick in demand. The companies have realized and have controlled supply to a large extent, so to not get into a glut again. But this cycle of uptrend in demand was followed by a sharp rise in the mortgage rates or interest rates, which rose more than 250 basis points. And despite that, we saw the entire real estate sector in India ending FY23 on a very high note with sustained demand momentum, record high pre-sales order books, and that I think should augur well for the sector. If you look at now, the other positive sentiment is that after having risen the interest rates, the RBI was the first to take a pause. We most likely see a pause by some of the other global central banks, signaling that interest rates could start falling by the end of this year, which is a key sentiment change, especially for the investors looking into the real estate space. I think overall demand which remains consistent. There are sectors or sub regions which will do well. So the Mumbai region and the Bangalore region should continue to do well. These are pockets that we like. We expect that the sector to continue to do well. So some of our top picks within the space, within the Mumbai region, we like Godrej Properties and Lodha, which is Macrotech Developers, and within the Bangalore region, we like Prestige Estates.
Right, so great momentum coming in terms of real estate players, and two topics, Prestige as well as Macrotech Developers, is something that you should be watching out for. Moving on, you have the FMCG pack that is in focus, Siddharth, in today's session, because if you see in terms of Nifty 50 as well, the top gainers are coming in from there. You have HUL, Tata Consumer, Nestle, Britannia, smart moves on these counters. And clearly, one of the reasons that we were picking up this morning was with the government imposing stock limits in terms of wheat, and this is done for the first time in the last 15 years. Now, overall, if you see the mandi prices of wheat have actually increased by around 8% in the past 1 month, but they've not yet translated in terms of the retail market. Do you think this is something which could be beneficial specifically with regards to FMCG counters, number one? And plus the IIP as well as the CPI data that has come in as well. How are you looking at these names, and from a valuation perspective, good entry levels?
Yes, I think, Kiral, if you look at the FMCG space, they went through a lot of up and down in the last 1.5 years, especially with the key raw material prices, wheat, sugar, milk prices going off the roof, impacting margins. What followed was the suppression in demand, especially in the rural areas. So now with the key raw material prices coming down, we are seeing inflation at 24-month low. The government preactively taking measures to contain inflation, and some of the measures that they're taking, including the ban on wheat exports. I think a cap on the wheat exports. That these are positive steps. What we also found that in the last quarter, the entire FMCG space, while the sales were broadly in line with estimates, margins have started to recover. And a key factor is that demand, especially in the rural side, the worsening of demand has kind of arrested, and we are kind of seeing a recovery especially in the rural areas. The urban continues to do well. With the monsoon, although expected to be a bit sketchy this year with the El Nino effect, I think the entire space would continue to do well. FMCG index was the first index to cross its previous highs, and continues to trade at life highs, largely driven by some of the select stocks like ITC, which has done well. The cigarette business for ITC has done well. So coming to the top picks, our top picks within the FMCG space is ITC and GCPL. This is Godrej Consumer. We are positive on ITC given its better than expected demand recovery and healthy margins in the cigarette business. Within the FMCG business also, the company has maintained strong momentum in sales and as well as good margins, plus the hotel business, which is again in an upcycle, adding to its overall profitability. Now, if you look at GCPL, it has improving its India business sales growth in recent years. FY23 will be the third consecutive quarter where the company will clock double-digit sales growth, and the working capital has been improving. The change in management is being effective. So these two stocks, I think, would be our preferred picks within the FMCG space.
Right, that's with regards to where the FMCG players go. Moving on, you have cement companies where a lot of positive momentum is what everyone is looking at. In fact, brokerages are also positive on the counter. If you see in terms of the recent past, you have Ultratech, which has already hit a 52-week high. And clearly, in terms of coal as well as pet coal prices, that is something which is softening, which is going to benefit cement companies. What's your view, Siddharth, in terms of cement players, and where would your top bets be?
Yeah. As you rightly highlighted, Hiral, so if you look at the cement demand continues to remain strong. And the volumes are estimated to grow double digit in the next 1.5 years. The volume growth has been clearly driven by the government's thrust on infrastructure development, be it roads, highways, other metro projects. There is a strong demand from the private capex cycle, and the best part is that the real estate space, which is the largest consumer of cement, is showing a good traction. So I think the entire demand dynamics continues to do well. What was not doing well like similarly what we have discussed for some of the sectors, was on the cost side. Imported coal prices have corrected almost 50% in the past 6 months. Petcoke prices have corrected by 23 to 35%. So overall, that is helping the cement space in terms of cost. So overall, as we see, we are very positive on the cement industry for the next few years on back of positive demand. Uh, the cost efficiency measures, especially some of the companies have installed green power plants, the waste heat recovery management systems, which has improved their EBITDA per ton, and that is leading to strong in profitability. In terms of stocks, picks that we like, Ultratech continues to remain our preferred picks. We have a target price of 8,600. The company is doing consistent capacity expansion, the market leader. We expect it to do well. In terms of mid-cap ideas, we like JK Cement with a target price of 3,675. It is both expanding in the grey cement as well as its white cement is consistently doing well. We are expecting a volume growth about 15% in FY24 and EBITDA per ton to improve to 1,000 plus in the second half of FY24.
Right. Moving on, Zee Entertainment is another stock to focus on as well in terms of today's day of trade. Siddharth, overall, clearly you have SEBI, which has gone ahead and banned Zee promoters from holding directorial and key managerial roles over fund siphoning, and that's Subhash Chandra and Puneet Goenka. Uh, Overall, what's your view on the stock? Because clearly there is going to be a lot of to and fro that will come in. They are indicating that Zee will file an appeal with SAT as well to fight against the SEBI order. How are you looking at the merger, number one? Two, do you expect any delays? And three, from a valuation perspective, do you still think that it's compelling?
So, I think it's a bit tricky stock and has been kind of seeing a lot of news flows and developments, and that is the key, right? The merger is the key story for the stock, and every time we see that it is getting delayed because of some of the other developments, be it with the NCLT, the insolvency proceedings that IndusInd Bank put in sometime in between. Now with SEBI coming out with an order on the two of the key management of Zee Entertainment. I think the stock would track the merger timelines. That is the key for the stock performance. This could potentially have a delay. But on the other side, there is no SEBI direction on the merger itself. It is only on these two people holding key positions. Now, both the parties, the Zee promoters as well as the Sony, can sit and discuss and decide to have someone else, a professional CEO or on the board, and they could be kept out of the board, and the merger could continue on the timelines that is expected, which is a positive for a win-win situation for all, Sony, for the minority shareholders, as well as for the Zee promoters. So I think if you look at the core business performance, Zee has been lagging a lot. The last quarter numbers, PAT was down almost 77%, 36% below our estimates. So fundamentals are clearly not in shape. The efficiencies will only start kicking in once the merger takes place. So the entire market will have an eye on how and when the merger takes place. So that is the key for the stock. Otherwise, I think in terms of fundamentals, in terms of valuation, the stock could continue to languish for some time.
Right, so that's with regards to Zee Entertainment. Moving on, your Hero Motor that is in focus. In fact, it's very close to its lifetime, 52-week high as well. And clearly, if you see the rural demand, it seems is supposed to is turning in favor, taking into consideration the May numbers as well. What's your view? Because a pretty mixed view is what we are picking up from various analysts so far, Siddharth.
Yeah, I think if you look at the two-wheeler space, after almost 6 years, the sector, the two-wheeler space in India is in focus and is seeing some recovery. Hero Moto had its analyst meet yesterday, where the management highlighted the focus on changing gears in key factors like growing the core business, focusing on the premium segment and building leadership in the EV space. Especially, we're seeing that the EV penetration in the two-wheeler space is pretty fast. If you talk about the space specifically, we see that the two-wheeler demand recovery in the domestic market is expected to be sustained this year, FY24, on back of a low base. We are seeing good volume recovery in the urban markets and a gradual recovery in the rural markets. Hero Moto is one of the pure play domestic two wheelers, and its core strength lies in the 100cc motorcycle segment, which we believe has a low vulnerability to the EVs because of the low cost of ownership. However, the company is not taking that lightly and is focusing on some of its EVs motorcycles launching as that as well. So I think the valuations are at a very low compared to some of its peers like a TVS or Bajaj, which has also done well. And that gives us a comfort that with a gradual recovery in the rural space, the stock should also do well. The stock is currently trading at about 14 times FY25 compared to about, say, 25 times for a TVS Motors, and that gives a lot of comfort. So we definitely have a positive view with the buy rating, and we have a target price of 3,500, which is about 20% upside.
Right. So that's with regards to where, we're looking at in terms of overall individual counters that we've spoken about. Thank you, Siddharth, so much for joining us on the show. A lot of sectors, a lot of stocks that we've discussed, and good views coming in there for investors to look at. But clearly, if you see from a markets perspective, there is some bit of momentum in today's session, but a lot of stock specific action, as we mentioned, we've been witnessing as we speak. We're above the 18,700 mark. Whether it's going to be sustainable on closing basis is something we need to wait and watch, and almost a 150-point up move coming in on Bank Nifty as well. In terms of the movers, you have Titan, Asian Paints, HUL, ITC, as well as Tata Consumer. So completely from the FMCG as well as the Dura consumer side is where we are seeing momentum, whereas pressure coming in on the Kotak, M&M, HCL Tech, Hero Moto, as well as SBI in trade today. In fact, lots more lined up on the other side. Please stay tuned to Big Prime. That's all that we have on this edition. Thanks for watching.